What are self-employment taxes, otherwise known as SE taxes? That's what we're going to talk about today. Hi, I'm Tony Cameron with TLDR Accounting, and today we're going to cover what are self-employment taxes, otherwise known as SE taxes, and when do they come into play. So when you are an employee for a business, you get your W-2, and taken out of that W-2 are payroll taxes. So payroll taxes are paid 50% by the employee and 50% by the employer. So as an employee, you only pay around 7.65% of your payroll taxes. So they're taken out automatically. It's just a done deal. And then your employer, so the business, also pays the same amount. That way, the government gets 15.3% in taxes. It goes towards Social Security and Medicare. That's kind of what happens. Now, when you're self-employed, you are the employer and the employee. Even if you're a single member LLC and you're just reporting your income on Schedule C, you still, that 15.3% still needs to be paid in. So when you become self-employed, you are now responsible for both portions of the payment, the employee and the employer portion. So automatically, the first thing that happens on your tax return is you're charged that 15.3% on your self-employment income. Then you also pay your ordinary tax rate on the income as well. So you do get taxed more than once on it. The same thing happens though if you're an employee. We just don't see it because it happens automatically. But when you become self-employed, it's very, very obvious that your taxes will go up, and that's because you are paying both sides of payroll taxes or SE taxes. And yes, you could say it does double. It's a little bit more complicated with that because it's only up until your first $132,000. But if you're making over $200,000, and there's an additional Medicare tax, so it's a little bit more complicated. But in general terms, you can think about the 15.3%. And when you're self-employed, you need to pay both. You need to pay the whole 15.3%. Now, a lot of reasons that's the reason why when you work with a contractor, so say you are working with an editor, they're not an employee, they're a contractor. They have their own editing company. They're going to charge more than if you had someone in-house do it because they need to cover taxes on their income. Versus if I had someone in-house doing it, we would, as the employer, we would pay half of it, and then the employee would pay half of it. So a lot of times with a contractor, you have to pay them more, and this is why. It's because of the SE taxes that they have to pay on their income. So your payroll taxes are included in your quarterly estimated tax payments. Those are due April 15th, June 15th, September 15th, and January 15th. We've covered this before. So you need to make sure that you pay these in when you're self-employed. And it can be a little bit of a shell shock the first time you file taxes when you're self-employed, since you will owe so much more. But there are ways around it. Well, not around paying your taxes, but there are additional deductions you can take when you are self-employed, as long as you're following all the rules. So I hope this was helpful. If so, subscribe to our newsletter where we send out additional content. Or if you just want to follow along with our YouTube videos, subscribe to our channel.